Thanks for joining us on Power Lunch. This is Bloomberg Quint. I'm Harsha Subramaniam.
Good afternoon. I'm Ira Dugal. Let's get you the headlines. Indian benchmarks recover from morning losses led by gains in IT and pharma stocks. The mid-cap index outperforms.
The rupee continues to weaken as widening trade deficit adds to the woes.
Jet Airways gains as much as 4% in early trade after Bloomberg News reports that a Blackstone group is in talks to buy stake in Jet Airways loyalty program.
Kotak Mahindra Bank falls more than 3% in trade after RBI rejects its plan for promoter stake dilution.
And Qatar comes to Turkey's rescue, pledges to invest $15 billion, helping the lira gain more than 5% in trade.
Also on the show today, we're going to be talking about the currency with Ashish Parthasarthy of HDFC Bank. IDFC Bank's bad loan ratio crossed 30% mark. We'll be talking to the Managing Director, B. Sriram. That's coming up a little later on the show. But first, the markets, and Neeraj is here with a closer look of how stocks have been moving today.
Well, flattish day. Must say we started off weak, but we recovered quite a bit in the first 45 minutes of trade. In part courtesy to, as you guys said in the headlines as well, the exporters doing reasonably okay. So IT and pharma have some gains to themselves in the session today. Sun Pharma, of course, is moving up not because of the currency necessarily, but because of a strong earnings show that it put up day before yesterday. So that that stock by itself doing okay. In fact, we're seeing this happening across the board, right? GAIL, third day of gains. I think it's up about 4.5% today, has gained almost 10% in the last 3 days. After those numbers too look slightly better than estimates. So those are doing okay. What's not doing well is Kotak Bank. That's putting some pressure as a result of on the Nifty Bank and the market by and large too. But it must be the top contributor on weightage terms as well. Down about 3.5% after the RBI rejection. The news is known. The stock is under pressure in the session today. Broader markets, we're seeing some result reactions as well. Stocks with slightly weakish quarter getting punished despite the fact that the index is flat. So Intrasoft Technologies is down about 20%, refuses to budge from there. The number is not looking all that great, and the stock is definitely getting punished. So 20% in trade. The stock has lost quite significantly, more than halved from the YTD highs. So that's one key stock to monitor. Jet Airways is doing well. In the band, but has pulled back about 3 or 4% in the session today after that news that we came out on the wires, yes, but we spoke about in the morning as well. So that's the other one. But essentially, Asha, result reactions continuing thus far. Come to the end of the earnings season. Now it'll be stock specific, but by and large, today's session too dominated by news flow and results.
Thanks, Neeraj, for that. But watch out for the currency. That's really where the action has been. The rupee has fallen over 0.5% to hit an all-time low against the US dollar, trading right now at about 17.33. This is the widest trade deficit gap in 5 years, added to the contagion effect of what happened in Turkey, the crisis in Turkey, that is. Ira is standing by to take us through some of those factors that are influencing the fall in the rupee right now. Ira.
All right, below 70 for the currency, well below it, 70.34 or so, and it doesn't look like there has been any dramatic intervention to try and curb a fall below the 70 level. I just want to make a couple of quick points before we go across to a wider conversation on this. First, it's still worth saying that this is a global story within which a local story is playing out. We have here the chart of the spot rupee and the JP Morgan emerging market currency index. The rupee chart has been inverted just to make the point that the rupee and the rupee's fall is not out of line with what is happening across the emerging market currency space. It's not purely a local story. Having said that, within that global story, if you look at the extent of depreciation in the Indian currency, you can't deny that the Indian currency, barring of course the lira, etc., has taken a slightly steeper hit than some of the Asian peers. You can look at it over various time periods. So if you look at a one-day chart, you know that the rupee today at 0.6% drop is worse off than all of its Asian peers. You look at a 5-day chart when this lira story has played out again, the rupee has depreciated 2.3%. The most in Asia. And if you look at a year-to-date period, again, the rupee down 9%, far more than its Asian peers. So the point I'm making is that there's a global story which is of weak EM currencies. Perhaps within that, the local story where the rupee was perceived to be overvalued, where some of the external fundamentals of the Indian currency, such as the trade deficit, have worsened. All of that means that the pace of depreciation in the rupee is perhaps worse than some of the Asian peers, at least. Speaking about some of those fundamentals, we got the trade deficit numbers, and that continues continues to be a pressure point. The trade deficit and what it means for the broader current account deficit. There are various sort of weights on the trade balance, but the trade balance deterioration, the largest weight on that continues to come from oil imports. Now, all of this, of course, is happening at a time when it's not like portfolio flows have been robust. So, we are hitting perhaps a 2.7 odd% of GDP current account deficit. But against that backdrop, you have negative portfolio flows for the year. 36,000 crore outflows on debt, about 1,000 odd crore on equity, means that we are negative on portfolio flows for the year to date, which means that your balance of payments is perhaps looking weaker than it has for a while. And that essentially sums up where we are in terms of the currency, a global story, within that a local story playing out.
Thanks for that. Let's also welcome in Ashish Parthasarthy, Head Treasurer at HDFC Bank. Ashish, thank you so much indeed for joining us today. Ira sums it up nicely. There are obviously global factors at play. There is also local factors at play, i.e. the current account deficit. What have you made of the level of the rupee? Most people were anticipating the rupee to weaken. One, the timing of this and the gravity of this move, has that taken you by surprise?
Yeah, I guess the extent of the move possibly is slightly surprising. However, direction, as you said, was something which is expected. And if you see the move in just the rupee, let's focus only on the rupee. There has been various phases, right? In the initial, if you go back to the beginning of the financial year, you have seen portfolio outflows from India, especially on the debt side. I guess debt yields, the interest rate cycle was turning in India, and you also have some amount of quantitative tightening in the US. So both that put together caused some debt outflows in the first 3 months of the year, and that started impacting the currency levels. That was followed with somewhat increase in oil prices, and that specifically affected oil importers, and India was one of the case. And this is the third one where it is got impacted by what is happening to the globe, to emerging market currencies globally across the board. Dollar is strengthening. Dollar index has strengthened against majors as well, and the bigger hit is being taken by the emerging market currencies. And so rupee has seen 2-3 phases for different reasons, but all in the same direction, and that's why you see rupee as one of the worst impacted currencies compared to various emerging market peers, other than barring a handful.
Good afternoon, sir. Ira joining in as well. Is there an element, sir, also of the perception that the rupee had become overvalued over the last few years? To what extent do you think that is playing out in the extent of depreciation? Direction, as you said, is in line with what's happening globally.
See, again, there are various measures to figure out whether rupee is overvalued or not. One, of course, just purely going by the trade-weighted RER, yes, that shows that rupee has been overvalued. But very often, and even RPI has alluded to this, that you cannot just take trade-weighted RERs as a guiding factor, because at the end of the day, capital flows are also have become a much bigger or almost an equal factor impacting currency rates and movement. So if you adjust for the productivity differentials, then the overvaluation almost goes away. And of course, in the recent times, the other currencies have depreciated. Prior to this depreciation, I think the rupee fair value was around the 69 odd level, so it was not very far from its fair value. Even now, it should not be very far from its fair value, given if you adjust for the productivity and growth differentials.
Ashish, what would be your assessment of this steep fall, and now people are now calling 72, 73 on the rupee, on the broader economy, i.e. the impact on the inflation risk, and secondly, what would this mean for corporate India, largely guys who are importing stuff? What is your assessment at this juncture on the broader economy?
So definitely it will have an impact on inflation. If it stays this way, for long term. But again, a lot of imported inflation is also dependent on the crude prices, where the crude prices have moved the other side slightly, at least, they are off their highs. So inflation will depend on, especially on the commodity side, what happens to the commodity prices also, which don't seem to be showing a lot of strength at this point in time. So, inflation could be slightly less of a worry than anything else. In terms of, corporate imports, again, a higher value or a depreciated rupee will definitely help, I would say, more make in India rather than, as compared to what we import. But however, yes, it could have impact on, profitability of entities who cannot pass on the increased, landed cost of whatever materials they use. And in a lot of cases, they may not be able to, so it might not eventually impact inflation to that extent as what we would think it would do just looking at the value of the rupee and how much it has depreciated. But definitely some small pass-through.
So just taking that line of conversation forward, frequently when we've seen rapid movements in the currency, the hedging issue comes up. What is your sense of whether hedging has become more habitual to Indian corporates, and hence that concern about unhedged exposures, etc., is extreme or not extreme at this juncture?
So, given the fact that, rupee has been stable, and whenever you have periods of, long periods of stability, obviously the, incentive to hedge, especially on the imports and liability side, goes down, and you have increase in unhedged exposures. However, if you've seen this calendar year as well as this fiscal, rupee has been moving. It has moved since the calendar year around somewhere between 9 and 10%. So, and even in this financial year, it would have moved around 5 to 6%. So, there has been hedging, especially on the import side. Hedging is almost continuous. What remains open, unhedged, possibly are some amount of foreign currency liabilities. That will always be an issue. But if you look at it over a period of time, maybe sometimes remaining somewhat unhedged on foreign currency liabilities helps, because you may not see the kind of depreciation as compared to the cost of hedging. In short periods of time, yes, you would lose money. So those issues, I think, will not go away, will always keep on coming up. And I don't think India would be very different from any other economic entity anywhere else, where whenever there is stability, and the cost of hedging is higher than what you generally would expect the currency to depreciate over the long term, then you will have some amount of increase in unhedged exposures. But what happens is, given that now our economy is more open, more integrated, there would be various other flows which are not hedged. It could not just be domestic entities, liabilities or imports, but it would be also a lot of investments which are made into India by various investors, whether it be direct investments or by the portfolio investors. They would definitely then try to hedge for short periods of time whenever there is currency volatility. They may do it onshore, they may do it offshore, but that has an impact on the level of the currency onshore.
Okay, I was just looking at the Bloomberg screen. We began this year close to about 63, 64 to the dollar levels. Ashish, what would be your house call on the near-term levels for the rupee?
So very difficult to make a call when the momentum is so strong, but we think at this point in time we could be closer to the top for the dollar rupee level. And while the momentum can pull it slightly more in that direction, but we could see a phase of consolidation in the next 1 or 2 months.
So, we were just having an offline chat on Twitter, and there was this conversation going on about whether there's a perception that has sunk into the market that the government is in favor of a weak rupee policy, so to speak. We've had a couple of government officials now come and talk about the fact that the currency is overvalued. There were some comments suggesting that even if the currency falls to 80, it may not be a point of concern. Do you think there is some sort of a subtle shift in the way policymakers are looking at the level of the rupee?
I don't know. I'm not so certain that there is a significant policy shift. See, what happens is, we have seen shift in the intervention strategies by the Reserve Bank of India over various, periods of time. Some are more interventionist, some are slightly more hands-off. That will keep on happening in terms of the strategy. But in terms of policy, I don't think, at least I do not have enough material to believe that there has been a significant change in policy on the currency rate. I think the broad policy remains the same, that yes, rupee will depreciate to account for its fundamentals in terms of inflation differentials. However, if there is any sharp move either way, there would be attempts to manage or reduce the volatility of those movements. And I think the third policy or directionally is that we would continue to build up our reserves as and when there is surplus supply of foreign currency.
All right. So just one last question from me. In terms of, what you're watching now from a currency market perspective, apart from oil and, of course, the trade numbers, is one now going to start watching the reserves also? I know they're way, way more comfortable than they were in 2013, but we have, lost reserves. We're down to about $400 billion now. Is that a watch point? What else are you watching, sir?
No, definitely. You need to watch all parameters. Right now, I think it is more momentum which is moving the rupee rather than all these fundamental factors, because in the short term what will move is momentum. Then one will have to take call what will happen over the medium term, and that's where you look at all these parameters. We are significantly in a significant better position than what we were in 2013 in all parameters. I think so that's at this point in time slightly less of a concern. But yes, if the momentum is too strong, then that becomes an overriding factor which you will have to consider, and whether then if measures are to be taken to stop that or that momentum in one direction, which I personally think is very unlikely that you will continue to see this momentum over an extended period of time. Yes, you will have few days more, but I don't think we should see one-way move on dollar rupee for an extended period of time. And I think it should stabilize in a range, it should consolidate in a range which is more reflective of flows and fundamentals. Yes, what you mentioned in the earlier part of the show, that trade deficits are high, current account deficit has deteriorated significantly, and we also expect possibly a balance of payments deficit during this financial year. So all that will cause the level of the rupee to be, or the level of depreciation of the rupee in this financial year or in this calendar year to be significantly higher than what we have seen in the last year.
Always a pleasure, Ashish. We'll leave it there. Thank you so much indeed for joining us. Ashish Parthasarthy from HDFC Bank on the currency. One more factor, global factor that we've been talking about, is the fall in the lira. Qatar now has come to Erdogan's aid, even as US refused to remove tariff on Turkey. Qatar's emir has promised to invest $15 billion in Turkey, buying Erdogan some time in the standoff with President Trump. Ala Shaheen reports from Dubai.
It's a search for allies. I mean, you said, they're reaping the rewards of the stance, in the Qatar boycott. And back then there were huge efforts led by Saudi Arabia to isolate Qatar. Well, who came to Qatar's rescue? We had Turkey, we had, closer ties with Iran. And now when, more than a year after efforts to resolve the Gulf crisis have basically failed so far, Qatar jumps to Turkey's aid. And one of the interesting things in the statement that actually came from the Qatari side, not the Turks, is that the 15 billion are coming in projects, investments, and deposits. We don't know exactly the details in terms of timelines or when are they going to deliver the money. What we know is that the Qataris have basically stressed we trust that Turkey's economy is strong. Don't forget that Qatar actually has has investments in Turkey. QNB, which is Qatar's biggest bank, has a unit in Turkey. So they also have an interest in propping up the Turkish economy aside from politics. You mentioned other countries. You mentioned Iran. One of the things that basically came about in the past few days is that Turkey said it's not going to support or implement U.S. secondary sanctions on Iran, which analysts that they've spoken with said it means that perhaps Iranian oil exports to Turkey will continue at the same level or perhaps higher even after the oil sanctions come up in November. So that's also a win-win situation for both parties.
All right, the contagion effect from the Turkish crisis coupled with the Chinese trade war has hit commodities hard. Everything from oil to metals and even gold has not been spared. However, there's some recovery in today's trade. Bloomberg's Anne-Marie Holden reports.
Recovering some of their dignity in the commodity space, but still, if you named a commodity yesterday, you can bet it was down and having a rough day. Here we're looking at precious metals. Spot gold in blue, yellow is silver, and purple is platinum. You can see them taking the downward trend. Really, yesterday, quite a plunge. And as you can see here, the dollar in white, that's where the haven was, and that's where investors were putting their money. Moving on to copper, I want to talk about its correlation with emerging markets. 52-week relationship between the two asset classes at a 6-year high, as you can see here. What happens if copper stays below the $6,000 per metric ton? It's going to be really bad news for emerging markets. And of course, the world's 3 biggest copper productions are in EM countries, Chile, Peru, and China. Goldman Sachs says, though, there needs to be a sustained rebound in copper and really in commodities in general for emerging markets to do well. And then finally, I want to touch on steel, and this is because Donald Trump gave an interview yesterday at the Wall Street Journal talking about his fact that he believes his tariffs on steel will rescue the industry in the United States. Here you can see steel versus copper. Look at that divergence. Trump, of course, has been zealous on the industry. His tariffs have really sent steel prices soaring, as well as China curbing some production out of there. And what Goldman Sachs is saying, though, is that this divergence has run its course, and they expect copper to catch up.
Anne-Marie Holden on commodity prices. Let's move on. Back home, Kotak Mahindra Bank's plan to dilute promoter stake does not pass muster with the Reserve Bank of India's guidelines. Remember, the RBI guidelines require Uday Kotak to cut stake in the private lender, and Kotak chose the non-convertible preference share route to bring down the shareholding. But the Reserve Bank of India has rejected that plan. Vishwanath is here to tell us the options before Uday Kotak now.
Well, to begin with, he did this 500 crore non-convertible preference share deal earlier this month, and that capital is currently available with the bank. If the RBI forces Uday Kotak to cut his stake from about 30.3 to below 20 right now, that would add another few thousand crores to his already well-capitalized bank. Plenty of capital available with Uday Kotak. Not entirely sure what to do with it, because the credit growth has not really, there's been about a 12-13% credit growth, but most of that is because of a base effect. Last 2 years, we've not seen significant credit growth, mostly single digits. So, that gets added. The other option available, and this is something that analysts have, they are guessing at this point in time, because there is no news in this matter, because a possible acquisition that Kotak Mahindra Bank could look at in the future, that is an available option for him to deploy this excess capital that is available. One other analyst who we spoke to, but he spoke off record, suggested that a possible way out of this situation is for Uday Kotak to ask for more time from the Reserve Bank of India. But again, that is a sort of a last option, because the RBI can't keep giving time to a promoter to reduce their stake in a private sector bank, because you can't change the rules just for one bank. Then you would have a line of other bankers also asking for similar breaks. So these are probably the only options available at this point in time for Uday Kotak, unless the RBI decides to give them a much longer leeway, and thereby giving them an option to reduce the stake further.
All right, Vishnu, thanks so much. I guess the options available have narrowed, but what they pick, we'll only know when they do. Let's move on. It's the end of the first quarter earnings season. Look at the corporate India balance sheets suggests how things have fared over the quarter. Darshan Mehta is standing by.
Yeah, it's been decent this time around because if you're looking at how the numbers have panned out, 25 out of the Nifty 50 companies have come out with numbers which met estimates. Another 13 came out with numbers which were strong. So out of the 50, 38 companies came out with a rather decent set of numbers. So it's been improving. But what the trend that we've seen is that the number of companies reporting inline set of number or mixed set of numbers has gone up from 19 in the same quarter last time around. It's come up to 25, and similar was the case as far as last quarter is concerned. The number of strong companies have come down and the number of weak companies have pretty much stayed at that level. But it's been a decent quarter so far around. So this is what's happened over the past 4-5 quarters. Now the ones in green basically are the companies that have come out with strong set of numbers. You have M&M, which is the only auto company. Reliance continues to do well. You have a couple of your NBFCs which have done well this time around. TCS and a couple of pharma companies that have done well. On the losing end, surprisingly, you have the auto names, especially the two-wheelers. Bajaj Auto was there. Hero came out with an inline set of numbers. You have the Kotak Bank and HDFC Bank, no doubt large companies, but their numbers coming in below what the analysts were anticipating. SBI is here and Lupin is here. So let's break it up into some of the sectors so we can better understand. As far as the auto is concerned, M&M was the only company on the auto space which came out with strong set of numbers. Third straight weak quarter for Tata Motors this time around. Two-wheelers disappoint this time around, be it a Hero or be it a Bajaj Auto. Eicher was in line, but two-wheelers of late has been rather disappointing as far as this quarter is concerned. L&T, after 3 strong quarters, it's come out with an inline set of numbers. The guidance they said will be front-ended. The management commentary was rather strong. So decent set of numbers from L&T this time around. After the strong showing by ACC and Ambuja, which are no longer in the Nifty, no doubt, but pan-India presence by the companies, ACC, Ambuja would expect to be strong. Ultratech did manage to disappoint as far as compared to what the other cement companies did point out this time around. Consumer, decent set of numbers, met estimates, HUL and ITC. ITC, rather, the cigarette volume, when a decline was estimated, they came out with a positive 2%, so that was strong. After 7 quarters of muted numbers, Asian Paints was strong this time around, and Titan continues to surprise, so Titan did well this time around. Some of the other sectors we want to talk about: oil and gas, explorers, ONGC, Oil India did well, refiners, IOC, BPCL, HPCL did well, Reliance did well, Petchem and Jio, both of them contributed significantly. But the big impact came in on the telecom space, where muted quarter was seen because on the telecom providers. Infratel was in line, but Airtel came out with a weak set of numbers. ARPUs were rather weak. Now, disappointment from Kotak and HDFC Bank this time around as far as the financials are concerned. ICICI Bank was rather weak. Axis Bank was strong around, both in terms of the numbers as well as commentary. On the technology front, TCS came out with the strongest number on the tech pack. Wipro, surprisingly, after quarters and quarters, did manage to surprise. The other companies came out with numbers which were in line with estimates. Some of the other sectors, Sun Pharma, the last number on the Nifty, came out with a very strong set of numbers despite weakness from Taro. Lupin, Dr. Reddy was strong, but that was only on account of Suboxone, which would stabilize in the next few quarters. Cipla met estimates, and Lupin was a big disappointment. US numbers were extremely weak. Couple of other sectors, Z, muted quarter, but the commentary was rather strong. So this is some of the sectors that have managed to play out. Let's point out, so when on 1st April, that is start of the quarter, the EPS estimates for analysts on the Nifty 50 companies was 134.8. When the July 10th is important because that is when TCS and IndusInd came out with numbers. So officially the Nifty 50 companies started with earnings. So already a 10% cut had already come in by that time. And finally we ended at 114.3. Now important to point out is this 114.3 is because of SBI. SBI came out with a huge 5,000 crore loss, and because of this the EPS numbers just come down. If you exclude SBI and just take the 49 companies, it comes close to 121. So pretty much 120, 121. So pretty much in line with what the analysts had done because they had already revised it downwards. But because of SBI, you have a much lower EPS number. But apart from it, it's been a decent quarter this time around.
All right, that's really with that. Thank you so much, Aneet, for joining us. That's the broader picture on the Nifty earnings this time. Up next, IDBI's bad loan ratio has crossed the 30% mark. We'll be talking to Managing Director B. Sriram on the other side.
City Union Bank, trust in excellence since 1904. City Union Bank, wishing you a happy Independence Day.
Dreamers, they're everywhere. You've met them, been to school with them, worked with them. They didn't seem different. Yet she's the one who surprised everybody. His crazy idea actually worked.
They are no different, they are you, when you take a chance on yourself.
These are the dreamers who found a way to run the engine of the world. These are the entrepreneurs. There is no formula. There is no right place, right time. There are no overnight successes.
But there is toil, there is preparation, and there is tenacity.
There is no end of the road, no obstacle large enough. There's just the vision and the heart that won't give up.
Because Agons of business never stop.
Agons of business never stop. Only on Bloomberg Quint.
Anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. Only on Bloomberg Quint.
Welcome back. You're watching Power Lunch. Let's take a look at the headlines. Indian benchmarks recover from morning losses led by gains in IT and pharma stocks. The mid-cap index outperforms.
The rupee continues to weaken as widening trade deficit adds to its woes.
Floods in Kerala worsen as the death toll rises to 67. A red alert has been sounded across 14 districts.
IDBI Bank's gross NPA figure crossed the 30% mark in the first quarter. The public sector lender, which is in the midst of an ownership change right now, also has to abide by a number of restrictions imposed by the RBI after being brought under the Prompt Corrective Action Network framework. Vishwanath Nair sat down with the CEO and MD of the bank, B. Sriram, and started off by asking him for his outlook on asset quality. Listen in.
If you see our slippages for the year, for the quarter one was about 7,800 crores, of which one account actually took a major chunk, about 5,000 crores came from one account. And the total slippages on the corporate side was about 7,000 crores. We are quite hopeful of the remaining 800 crores in the retail that we'll be able to pull back. But it's the corporate book that is giving us problems and continuously. But yes, if you see our SMA book at the moment, we have a total SMA position of about 7,600 crores. And more so in the SMA 1 and 2, it is down to about 5,600 crores. So we are looking at least reduction, substantial reduction in the slippages as we go from quarter to quarter henceforth. And there are no such large chunky accounts that need to be managed in the future. So hopefully as we go into the future quarters, we'll find much lower slippages on the corporate side. Our retail side continues to be quite good. Our total retail portfolio is about 80,000 crores, and a structured retail portfolio of about 46,000 crores has very good quality, and we'd like to build upon it in the quarters to come.
Right. Talking about your reducing book size, now that, as we understand it, is a function of the restrictions placed on the bank under the Prompt Corrective Action. Now, we had filed an RTI request with the Reserve Bank, and in their response, they pointed out that one of the restrictions that has been placed on IDBI Bank is that of reducing the loan book. So, as such, it wasn't an option for IDBI Bank to reduce the high risk exposures, right?
So there are 2-3 ways. One is, of course, as I said, is try and the bank has been trying to reduce the risk-weighted assets and to make sure that the quality of assets that we hold is much better. So if you see the credit risk weights, credit risk-weighted assets has actually come down by about 55,000 crores year on year. Also, credit risk-weighted assets now is about 87-88% as compared to about 108-109% year ago. So this is one way in which we try and make sure that the book is better than what it was earlier. The second issue is, of course, in trying to, as soon as we are able to get some capital and try and improve the position of capital, which largely today has been going towards some retail growth and making provisions for the credit costs. We will be in a position to try and approach RBI to try and see whether some of the restrictions on the corporate side also could be reduced. But that is something that is for the future. But at the moment, yes, we need to conserve capital. We need to make sure that the risk-weighted assets go down. We also need to make sure that the opportunities given in the areas in which we can do business, largely in the retail, structured retail assets and SME, we should be able to push more efforts into those areas and try and make sure that we continue to grow.
Two questions there. Firstly, on your ability to increase your capital base. Now, the LIC deal is one thing that has been pitched as something which should take care of some of these issues. But has the RBI at any point in time indicated that a change in ownership could lead to some easing of restrictions? And secondly, what is the timeline for this deal that is being touted as an option for IDBI Bank's turnaround?
No, there has been no talk at the moment on that because it all depends. Once post the deal happens and the situation of the bank and that scenario, we will make out a presentation or a case to try and see as to whether there is a how much of an ask can we go to RBI with, and they will then probably examine and see what they can do. But at the moment, there is nothing, no discussions on that. But the second question is, of course, on the progress of the transaction. As I've been, more or less, the current status is in the public domain, and you know that the government of India has given an NOC for bringing down the stake to below 50% and letting LIC acquire its controlling stake along with promoter status, and also relinquishment by Government of India of management control. All these have been conveyed to LIC, and also there are a lot of regulatory and other clearances, compliance issues that needs to be done before the deal progresses. And in that sense, it may take some time, but largely the process is on, and we are hopeful that as early as possible we will try and conclude the transactions.
Has the board, as of now, approved? The bank's board has
Subject,
approved
of course, to all the regulatory compliances and all.
Right, Mr. Sriram.
You see, the matter is with the LIC now, and the LIC board will have to first take cognizance of it.
Okay, so they need to come to you with a full form plan, and then the bank's board would take it up at that discussion.
That's right.
Okay. Just to bring this conversation back to your high-risk exposures, now I looked at the analyst presentation on the bank's website, and according to that, about 30,000 odd crore worth of power sector exposure exists on the book, and nearly 10,000 crore, or a little more than that, is standard stressed. Trying to understand if this is expected to flow into the NPA category anytime soon. Also, what is the impact expected from the RBI February 12th circular, which would force some of these assets to go into NPA at the end of this month?
As I said earlier, the issue today is only in terms of what the SMA book is and what is the standard book is. All the other schemes of which we had as part of resolutions have all been withdrawn. So in that sense, I've given you a sense of the numbers of the SMA book for the bank. As far as this February 12th circular goes, as you know, we were cognizant of the fact that it is in operation since the date of February 12th, and rather than waiting for August, it was made immense sense for us to take a view as to what of these accounts and which of these accounts there could be a possibility of resolution. And in that sense, I think only the accounts which have progressed substantially are being looked into in the last couple of weeks now. The remaining actually have gone. The banks have taken note of it and probably have, for us, those accounts have already been classified. So in that sense, it's a process of 5-6 months which have gone, rather than waiting for a single day and then going ahead. The only issue is, even in the sense that where the resolutions have not gone through, filings with the NCLT, which was supposed to be post August 27th, some of them have actually been filed earlier as well, because there was no chance of any resolution in prospect.
In terms of the accounts where you expected or where you expect some deals to go through, what is your exposure there, where the resolution is in sight?
The numbers are not many. There will be about 4 or 5 accounts like that, but I don't have offhand the total exposure of these accounts.
Sure, sir. Bring your point to the CASA ratio of the bank. Now, we saw the CASA ratio dip below the December 2017 number in the June quarter. Now, since it is a stated restriction within the PCA framework to reduce your high-cost deposit base, but your CASA is also falling. So, is there anything that the bank is doing to ensure that this CASA ratio goes up further and probably reduce the large packet of high-cost deposits on the book?
CASA is an area of very great focus for us, and we are pushing all our branches to improve the quality of customer acquisition, and also in terms of trying to get current account balances. If you see year on year between June last year and June this year, there has been a good increase on that. It also, in many a case, CASA depends on certain quarter issues, like for example the March quarter is typically very high quarter balances, CASA balances for many banks, because of flow of certain of these accounts, the flow of money into various accounts of current and savings accounts that happen. But yes, it is a matter of huge priority for us, and we will go all out this year to try and improve the CASA balances as one of our key areas.
I would assume that the change in flow is because of the CA element of the current account element of it, because typically savings account tends to be more sticky in nature.
That's right.
Okay. Okay. Just a couple of last few questions. Firstly, on some of the restrictions that have been placed, what has the bank done to ensure that the capital base gets protected? There have been some cost-cutting measures that have been announced by the Reserve Bank of India. Just wanted to get some sense on that. And also on the non-core asset side, what is the bank expecting in the rest of this financial year?
I think both these areas the bank has done very well in the last year or so, because if you see the operating costs, they have been substantially under control, and we will continue to do so in the quarters to come. On the non-core side as well, we are one of the banks who have gone aggressively and sold out a large proportion. Actually, today we don't have too much of non-core to be put on the block. But we are hoping about 400 to 500 crores of non-core will also be sold this year as part of our plan for the year, for the remaining part of the year.
Right, sir. You were appointed at the bank for a period of 3 months. Firstly, has the government indicated on any extension of this period? Also, secondly, is it likely that we will see the LIC deal close within this span of time?
There has been no discussion on that, no decision yet on my tenure. As you know, I've been appointed for 3 months. And on the LIC deal, as I said, there are regulatory compliances, clearances that needs to be gone through. So we would take it, as I said, the intent is to try and close out the transaction as early as possible. But of course, subject to everything being clear in law and order.
So it's likely to see what, 3 to 6 months at least before this closes?
I can't put a finger to it, but yes, we would hope that we'll try to get it within 3 months or so.
All right, that's Vishwanath Nair in conversation with IDBI Bank with the highest proportion of bad loans on their books. Let's move on. Prime Minister Narendra Modi has announced the launch of the National Health Protection Mission. The insurance pillar of the Ayushman Bharat program pilot testing has already begun. While the nationwide launch is slated for the 25th of September, providing healthcare to 10 crore families comes with quite a few challenges. The biggest of them, according to Indu Bhushan, Chief Executive Officer of Ayushman Bharat, will be the availability of beds in rural areas. Listen into a slice of that conversation.
This pilot is basically to test out our systems. And when I say systems, it's largely our software that we're using for identifying the beneficiaries and also for managing the transactions. So we are actually starting this pilot in 14 provinces, 14 states, and that has started. And in a couple of weeks, we'll also include other states. And so we want to continue this pilot in all states who have signed on, and so that they're ready to launch on 25th of September.
Well, there's not too much time between the pilot and your launch date of September 25th. Is it enough to test your systems, and are we running a little behind schedule, Mr. Bhushan?
Well, we are not behind schedule. Actually, had we wanted, we could have launched the scheme in a few states already. The software that we've used is from Telangana. It's a time-tested software, and we have customized it for use in other states. But again, we wanted to be clear, we want to be sure that this software works fully. And actually, more than the software itself, it's the human resource issue around software, that we should have people who know about the software and they can use it well. So we want to have a smooth launch, no hiccups, and that's why we've taken this time. But you're right, 40 days is not a long time, and our clock is already started to tick, and we have come in almost like a mission mode, and we have a war room that we've established, and we'll be working day and night to make this happen.
As we have spoken before as well, Mr. Bhushan, one of the key challenges is to identify enough hospitals or medical centers with that many beds to effectively help people who are going to be part of this scheme. Has there been any progress on that front, and can you clarify for us that right now at this pilot test stage, will there be private hospitals who are also participating?
In the test stage, it's largely the public hospitals who are participating, but the empanelment process for getting private sector involved has already started, and we have actually opened the empanelment portal, and already about 8,000 hospitals have started to apply, and we hope to have this done very soon. And in terms of number of beds, Tamanna, as you can understand, that we are targeting 50 crore people, and if on an average 2% of them need hospitalization, we'll need about 1 crore, we'll have 1 crore admissions. And if we say that about 200 bed days can be there in one hospital, like one bed can provide 200 number of bed days, we'll need about 2 lakh beds. and already the number of hospitals which have come on board are about close to about 60,000 beds. So we are reaching there, and we are very confident that by the end of this month we'll have a necessary number of beds in place. But actually, number of beds is not the problem. What I see a long-term problem is that we need to have more beds in rural areas and tier 2 and tier 3 cities, and that will take some time. And this is the promise and vision of the scheme, that it will encourage and motivate and incentivize private sector to open more hospitals in lagging areas.
All right, let's shift focus to the flood situation in Kerala that's worsening by the day. Latest reports show death toll rising to 73 across the state. All 14 districts are still on red alert, with the flight operations suspended till Saturday. To take stock of the rain situation in Kerala is A.K. Srivastava, Head of Climate Monitoring and Analysis at the Met Department. Mr. Srivastava, thank you so much for joining us. What is your current forecast of the situation in Kerala? It's been an unprecedented tragedy of unprecedented magnitude. It's been raining continuously. Will it continue to rain for the next 3 days?
Yeah, at least 48 hours the heavy rainfall is likely to continue for various parts. Of course, intensity may after 48 hours that will decrease.
Okay, sir, just if you can step back, the southwest monsoon, was it anticipated that this is going to cause this much, that's going to come in this magnitude and cause this much fury?
Let me tell you, any model over the smaller scale is very difficult to foresee. But nonetheless, over the whole peninsula, we had anticipated that rainfall is going to be normal or slightly above normal. That was anticipated. But in any model, doesn't foresee over a smaller state like Kerala what could be amount of rainfall.
Okay. With the data that you have currently, sir, are you expecting rainfall to continue in all parts of Kerala, or will it be concentrated on specific districts?
Now, we are expecting particularly central and northern parts of the Kerala. Other parts, heavy rainfall. Other parts also will receive moderate rainfall.
Okay.
We are expecting rainfall throughout the state, but nonetheless, heavy pockets would be central and northern parts.
Sir, even as we speak, the state government has ordered evacuation from most of the villages in and around areas where there are rivers in spate. Most rivers, we understand, are in spate. Do you have any more information to give people in Kerala of what the rain forecast is likely to be?
Actually, we are sending our forecast to the all concerned, right from Chief Secretary's Relief Commission, every district manager. Steps they have to take. I'm not sure whether, of course, they are taking steps also, but that is not our purview as per se. We are informing them.
All right, Mr. Srivastava, thank you so much. That's the weather department saying that rainfall is likely to continue. In Kerala, the situation is not looking good. Most people have been asked to be evacuated from villages, particularly along the rivers of Periyar and Aluva.
All right, we're tracking that situation, but that's all the time we have on Power Lunch. Thanks so much for watching.
Thanks for watching.
City Union Bank.